This is great for the profit. So I know there has been some stumbling blocks. Companies have missed numbers, but I know that we are getting ready for some major upside surprises. The dollar is also rising. If that can happen, which is rare, but it's been happening, that's actually better for gold mining companies than when the dollar is falling, because it means their profits are going to go up even more. So what's happened recently, so I really think people should be buying gold here at about 2,700. It's still a good price. Silver, right about $32 an ounce. It held the $30 support level. As I've been saying on the podcast, I think $30 silver is like $2,000 gold was, and $32 is a cheap price. So people should be buying the metals.
Welcome back to the most important video. Today, Peter Schiff explains why gold at $2,700 and silver at $32 are still incredible opportunities for investors. He breaks down why silver holding the $30 support level is a critical signal and how gold mining stocks are an overlooked treasure in today's market. Peter also clears up misconceptions about mutual fund returns and shows how distributions add to long-term value. This video is packed with actionable insights to help you make smarter investment decisions in gold, silver, and beyond. Don't miss it. Let's dive in.
Today's podcast by talking about gold, which has risen by better than $60 an ounce so far. Gold is trading just above $2,700 an ounce. So that means we're less than $100 below the all-time record high. So we've recovered most of what was lost following the election of Trump. In fact, gold was about $2,750, so it was already off its highs when Trump won the election. So gold's now only down, less than $50 from where it was. And in fact, I'm looking at gold trading on Wednesday morning in Australia, and gold is at an all-time record high tonight in Australian dollars. And recently it made all-time record highs in the euro and the British pound as well. So it's just the US dollar that we haven't made a record high in, but we will shortly. So you're talking about maybe gold being down 3.5% from its record high. Yet if you look at the gold stocks, look at the GDX, based on where it closed today, and it's been up the last couple of days because gold's, really moved. But the GDX, which is the big index of gold mining stocks, would have to rise 16.4% to get back to the high from before Trump was elected. 16.4%. Gold only has to rally about 4%.
Hope you're gaining valuable insights from this video so far. But here's the exciting part. Peter is about to uncover something that will blow your mind and completely shift your perspective on the gold and silver markets. Stay tuned, because what's coming next could be the game changer you've been waiting for.
To make a new record high. That just shows you how overdone the sell-off in gold mining stocks is, how negative the sentiment is. In fact, if you look at where the GDX is trading now, it's trading about where it was in July, when gold is well over $300 an ounce higher now than it was in July. So none of the increase in the price of gold has benefited the companies that mine it. And of course, they own a lot of gold in the ground. That's what they're mining. They're mining their own gold. In fact, if you remember when Newmont Mining had a big drop, it was because of higher than expected costs. And most of that was from an Australian mine. They bought out and Newcrest Mining in Australia, or here, maybe they bought them both, but there was some a higher cost. Well, costs are collapsing in Australia right now because the biggest cost for the mining company is the workers, the labor. Well, when the Australian dollar is falling, as the price of gold is rising, that's the best of all situations for gold mining companies. See, normally when the price of gold is going up, the dollar is going down. And so that would mean the Australian dollar is going up or the Canadian dollar is going up. And so that would increase their local costs. But when you have a situation where gold is rising and the dollar is also rising, if that can happen, which is rare, but it's been happening, that's actually better for gold mining companies than when the dollar is falling, because it means their profits are going to go up even more. So what's happened recently, and if you throw in cheap oil, and oil prices under $70 a barrel in dollar terms are very cheap. So gold, I mean, oil in relation to gold is as cheap as it's ever been. This is great for the profit. So I know there has been some stumbling blocks. Companies have missed numbers, but I know that we are getting ready for some major upside surprises in earnings and dividends in these gold mining stocks, and nobody is positioned for that. So I really think people should be buying gold here at about 2,700. It's still a good price. Silver right about $32 an ounce. It held the $30 support level. As I've been saying on the podcast, I think $30 silver is like $2,000 gold was. That was the support that we rallied off of and went all the way up to almost 2,800 before we had a pullback on, Trump was the catalyst to get that, and the dollar rally. We got a pullback in silver as well, but it held that $30 support level, and $32 is a cheap price, so people should be buying the metals. And again, even more so to take advantage of this gift opportunity in the gold mining stocks. If you happen to be a shareholder right now in the Euro Pacific Gold Fund and you noticed that the fund was down 95 cents today, it's not because it dropped. It actually was up a bit. We had to pay out a dividend. Every year, mutual funds are required by law to pay out capital gains that have been realized during the year. And so since it's not a static portfolio, we're buying and selling, and that activity generated capital gains, and now we have to pay that out to the shareholders. And, a lot of people who look at my funds and they look at the price and they try to say, oh, these funds have done lousy, they haven't gone anywhere. They don't factor in all these substantial distributions that are paid every year from these funds of both income and capital gains. So when you're just looking at the price of a fund, it doesn't really tell you anything because you have no idea how many distributions were made over the course of time, because a lot of the investors take those distributions and they just buy more shares. So instead of having a higher share price, they just have a much bigger share count, or they take those distributions and they live off of them. They spend them, right? So they got income off their investment, and that still counts as part of the return.
If you found these insights helpful, don't wait. Start exploring gold, silver, and mining stocks today. And if you want to keep learning about these opportunities, make sure to like this video, share it, subscribe, and press the bell icon for more actionable tips. Stay informed, stay prepared, and let's navigate this market together. Thank you.